So sometimes it does not matter whether a video is long or not. What really matters is if you stay to extract the value in that video. And many of us have been in a classroom whereby you spend 2 hours, 1 hour 30 minutes there. But this video is not going to be more than 20 minutes. Okay, so this is BFX again, and today I bring to you a very important aspect of Forex. So if you're an individual, you're trying to venture into Forex, or you're already in Forex already, I'm going to speak about 3 basic things that are very crucial in your journey. Yes, and also in my own journey, because I'm also working on myself and everyone is working on their self. So the 3 basic are: number 1 is the technical aspect, the fundamental aspect, and the psychology aspect. The technical aspect is what we're going to speak about in this video. The fundamental aspect and the psychological aspect is what we're going to talk about in previous videos. The fundamental aspect is just about news, economic event that triggers where the market goes. Why psychology is you yourself, the way you think. Yes, your greed, your fear, your emotions, everything does, and that psychology part of it is almost 80% of what makes you a profitable Forex trader. So today we're going to be talking about the technical aspect of Forex. What I mean by technical aspect? What I mean by technical aspect is, what are those things that make you as a technical trader? When we talk about strategy, when we talk about models, when we talk about tools you use as a Forex trader, those tools tells you when to get into a market, when to get in outside the market, and just when to stay and don't take any trade. Those are what called technical aspect of Forex. So in this technical aspect of Forex is intro trade. You have to understand these 3 parts in this technical aspect of Forex. The number 1 is market structure. Number 2 is entry strategy. The third one is the exit strategy. I said the first one was what? Market structure. How do you determine a market structure? Is market heading up or coming down? As a Forex trader, when you wake up in the morning or anytime you open your laptop, you have to know, is the market heading up or is heading down? Because if the market is heading up and you're trying to sell, you're going against the market and you're going to get burnt. That's just the fact. So as a trader, the trend is your friend. The trend is your friend. So in this video, we're going to talking about the market structure, that is how to determine the trend, and also the entry strategy, when to get into a trade. Also, when to get outside a trade. I hope we all know the type of market structure we have. We have the uptrend, we have the downtrend, we have the ranging market. As we all know, the London session and the New York session are the most trending aspect of Forex, whereby the volumes are very high. So today I'm going to be speaking about types of market structure: the uptrend, the downtrend, and the ranging. Those are the 3 types of market structure. So now let's go to my board. So let's talk about the uptrend market structure. I remember that we are still talking about the technical aspect of what? Technical aspect of Forex. Okay, so now we're going to talk about number 1, uptrend. Uptrend. When the market is an uptrend, it's making a consecutive higher highs, higher low, higher highs, higher low, higher highs, higher low, higher high, higher low. That's an uptrend. I was talking about a downtrend. A downtrend. The market is making a consecutive lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high. Do we get it? Then when we talk about the third part, which is the ranging. The ranging market. This ranging market, the market is neither going up, neither coming down. So it's just like this, in a straight line, in a straight line. This is the third type of what? Market structure. And what I mean by it, the trend is your friend. If you open your chart, go into the higher time frame, maybe like the 4-hour time frame, 30 time frame, look at the trend of the market. Is this market going up or is coming down? You can't really determine a trend of a market on lower time frame, such as 15-minute or 30-minute time frame. You have to go to the higher time frame, because that is where the big banks are heading. The higher time frame tells where the big banks, the institutional traders, the hedge funds are heading. Okay, just like gold now. Gold is going uptrend. It's uptrending, because I'm currently buying gold right now, and maybe I will display my position on the screen, because I'm currently buying gold right now. So sorry guys, my phone went off, my phone light went off. So now let's continue. The first one is the uptrend. Uptrend under what? Market structure, right? And remember that in the market structure we have the uptrend, the downtrend, and the ranging market, right? And this market structure is under the technical aspect of Forex, and that's what will make you a technical Forex trader. So now this is an uptrend, right? So as you can see, this market went up, came back down, went up. It's making a consecutive higher high. This is higher high, higher high. This is higher low, higher high, higher high, higher low, low. Are we getting this? This is another higher high. Why is this higher high? Why is this higher high? Because this high is higher than this. This high is higher than this, right? And why is higher low? Because this low is lower than this one is higher low, but it's still a low. This place is low, but it's still high. This high is still higher than this, but it's still a low. Do we get it? That's how the market moves. The market moves in that kind of waves, upward. The market does not just go straight line like that. No, it makes an impulsive move, and it makes a correction move. Impulsive correction, impulsive correction. Do we get it? And where you would like to get into a trade is when a market has made 2 consecutive higher highs. If you see the market move this way, then you should be looking forward for a trend line. That's when you're going to draw a trend line between this previous low and this second low. Then hopefully the market come back the third time to touch the trend line. And when market touch the trend line, then you'll be looking forward for a what? For a buy. That's when you are going to be looking forward for a buy to the upside. And when the market comes back to that trend line again, you can also do what? Look forward for a buy. That's how to follow the trend. Do we get it? But before going in for that buy, you are going to make some candlestick confirmations before you go in for that buy. It's not just when the market comes to that trend line then you start buying. No, it doesn't work that way. You are going to wait in for candlestick confirmation. If you don't know what candlestick confirmation are, just comment in the comment section. Anything you don't understand in this video, I'm going to attend to them as long as you do what? As long as you comment what I should talk about or what you don't really understand. Then I'm going to talk about them in our next video. So now we have spoken about the uptrend. Now let's explain the downtrend. The downtrend is what? It's making a consecutive lower low, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high. Why is this a lower low? Because this market is low, then this market will create another high, create another lower low, create another lower high, another lower low, another lower high. That is how a downtrend moves. You can check your chart. You can check a downtrend chart. So you're going to see the pulling up, pushing down, pushing up, pushing down. But the overall movement is coming what? It's coming down. Do we get it? And this is an impulse move. The market will make an impulse move, but the direction is still coming downward. Then it will make a correctional move. Correctional move, impulsive, correction, impulsive, correction, impulsive. Do we get it? Then you cannot draw a trend line from here, or touch here, or or connect here to here, just like this. If you are connecting this previous lower high and the second lower high together, then you'll be expecting the market to come back the third time to touch that trend line to do what? To sell. Or you can use what we call Fibonacci retracement. Fibonacci retracement to go in for a sell here. Do you get it? If you don't know what Fibonacci retracement is, comment in the comment section. I'm going to explain it in my next video. So now, do we get the concept of downtrend and uptrend? And as you can see, the trend is also doing what? Is breaking this previous high. Can you see? It breaks here, it breaks here. Here too, it breaks this low here. It breaks this low here, it breaks this low here. Do we get it? That's just the concept of uptrend and downtrend. Now talking about the range market, this one we'll call this one we'll talk about the support and resistance. This top here is called resistance, or you can call it high. Anything you. Someone just woke up one day and called it resistance for us, and we all call it resistance. Someone just woke up one morning and called this downward for us support, and we are all calling support. But it's just simple. This is low, this is high. Do we get it? So now this market is moving up, come down, down, up, down, up, down, up. Do we get it? This support, no price was initially here, and we get price was initially here. Buyers bought this market upward, right? Sellers did what? Sold it back down, because the buyers were not willing to buy above this previous price. This price might be 1.2. Buyers are not willing to buy above this price any longer, and whereby sellers are willing to sell downward. The same buyers that bought here are also interested when the price comes back to the previous price, and they will do what? They will buy again. That's just how the market moves up, moves down. It is not so advisable to trade a ranging market if you're not really good at what you do when it comes to trading, because a ranging market can be so frustrating sometimes. But when it comes to uptrend is very smooth, seamless, and easy to go in and make your profit and stay back. So I hope we all understand what the technical aspect of forex trading talks about, and under the technical aspect we spoke about the market structure. This is an uptrend, a downtrend, and a ranging market. I hope we all understand that. So now the next one I'm going to talk about is when to get into the market and when to get outside the market. I already spoke about it earlier, but I want to emphasize more on it. Now, as you can see that this market make a higher high, higher low, higher high, higher low, and you drew your trend line, right? And you're waiting for the market to come back here. You wait for candlestick confirmation here to go in for a buy, because this price is breaking above this previous resistance here. I will get this previous higher high here, right? Then you are hoping and speculating that the price will push above and break this price and push up. This is where you're going to get in for a buy. Same thing as for a downtrend as well. You have seen that this market has pushed down, broken this low. The market will not just keep pushing down. The market will do what? Will make a correctional move. Then this is where you're going to take your entry, using Fibonacci retracement or using a trend line. Do we get it? Then you take in for a sell after waiting for candlestick confirmation. Do we get it? That's just a simple aspect of market structure. This video is not enough. What we have learned in this video, you have to practice yourself, because implementing is power. Knowledge is not power until you implement it. This is BFX again. I hope you find nugget in this video. So I hope to see you guys in my next episode. And mind you, anything you want me to talk about, whether in this video or it's not in this video, and you want me to emphasize more, it's my joy to share my knowledge, because this is what I have passion for. I love trading and I love teaching as well. Thank you very much, and this is BFX again. See you next time.